think 52 years worth of Earth Day celebrations at this point. And, I was reading up a little bit on Earth Day and, realized that it was a US led celebration that of the Earth and questions about how we preserve the Earth that happened in the 1970s. And, the rest of the world joined in. From what we did. We were leaders in recognizing the importance of Earth and preserving the Earth. And, I think what that tells you is that there's a huge opportunity back then and a huge opportunity today for all of us to lead around the world in driving some impact. And Insight, as an investor, has also realized there's that opportunity, and we have begun to move in a very specific direction around finding amazing companies in the clean tech space that are making meaningful progress against what I think we can all agree are intractable problems, some really hard ones to solve. And we have an amazing panel of folks joining us today from three of our portfolio companies. I'll let each of them introduce themselves, but each in their own particular area are doing some incredible work and doing things that can so meaningfully make impact. And so we're going to have a pretty robust discussion today. And a lot of topics that we're going to want to hit. I'm going to start with Sar coming from Israel. Welcome, Sar, from Beewise. Why don't you give us the to be or not to be, as the case may be, from you?
Hi, guys. Thank you for having me. I'm Sar from Beewise, CEO and founder of Beewise. Beewise, 4-year-old company, about 120 people strong, and we do one thing and one thing only. We build robotic beehives. The reason why we build robotic beehives is because, not sure if people are aware, 35% of all the bees on the planet are dying out every single year. And this device actually helps save the bees in a robust and scalable manner. This is us.
Excellent. Thank you. I'll move next to Chris for a quick introduction from Project Canary.
Good morning. I'm Chris Romer, CEO and co-founder. Project Canary is a B Corp, and we are a data analytics and environmental assessment company that's helping a lot of people, most particularly right now, mostly the oil and gas and the energy industry on their pathway to net zero. So nice to meet you all, and it's great to be part of the Insight family. And the simple thing I'll say is that we are moving to what I call the measurement economy. You have to measure what matters. And climate change is a math problem. You can't estimate, you can't greenwash yourself to climate change. You actually have to measure it very accurately, and you need to hold everybody accountable. And that's what we're gonna do. Someday soon, you'll know on almost every product you buy what their true climate score is, and the brand equity that those clients have will be determined on their progress and their pathway to net zero. Chris Romer.
Thanks, Chris. And Alistair, last but certainly not least, from Sylvera.
Hi there. Thanks for having me. Great to be on this great panel. Yeah, I'm CEO and co-founder of Sylvera. Simply put, we are Moody's for carbon offsets. We provide robust, accurate ratings data on the quality of the offsets on the market. And we serve that data via an API and a web application to the exchanges, to the traders and the buyers of carbon, so that they can do the right thing and buy carbon that is real, so they're not greenwashing, and then report that to their stakeholders.
Awesome. Well, welcome everyone. What I thought is I would ask each of you some individual questions, and then we would move to some group topics and then open it up to the larger group for questions. Please do put your questions in the chat. We will be absolutely making sure the group does respond to those. So I'm going to start with you, Alistair, if it's okay. a lot of folks talk about net zero or carbon neutral, a lot of topics that are out there that people may or may not actually understand, and they don't actually understand the role of carbon offsets in getting to net zero. I was wondering if you might be able to explain to everyone a little bit about that, the risk of these carbon offsets and what you're doing to make it better.
Sure. So the context for the whole increase in spend on offsets that we're seeing is net zero. So the world needs to get to net zero by 2050 to have a decent chance of staying below a 2-degree or around a 2-degree warming. Going beyond that, it's going to be extraordinarily foolhardy. To do that, by that year, every ton of emissions that hasn't managed to been reduced or been mitigated has to be offset quite literally by removing a ton of CO2 from the air from that date on. So when a business buys an offset, they're usually now really doing it in the context of that transition. So they have to reduce their emissions first and foremost, so year-on-year reductions, a very steep curve of reductions, a very ambitious curve really to deliver that. And also ramp up their purchases of removals offsets. They also can buy what are called emissions reduction offsets. So that's funding the reduction of emissions elsewhere, for example, in deforestation. That's going to sit outside of corporate accounting, but it needs to be financed somehow. So a business can also choose to do that. Regardless of what it does, there is a massive spectrum of quality in both of those categories of offsets. So as the spend goes up and becomes more material, then there becomes kind of a duty of care from for a business to make sure that what it's buying is actually what it's claiming. And actually, really, that's the driver for a lot of purchase decisions for us. It's, hey, when it was a marketing budget, it was 500K. We didn't really care. Now it's $50 million. Somebody's going to be in trouble if this is not real, and we spend $50 million and we're on the cover of the Wall Street Journal for having greenwashed extremely by buying some terrible offset. That's a terrible deal. That's a really bad deal. So we help them solve that problem.
What's an example of a terrible offset?
A simple case, simplest possible case, for example. A project may be selling offsets that relate to the restoration of a mangrove forest. So the mangroves got wiped out. We're gonna, they've put fish ponds there in Indonesia. Like, so much of the mangroves were destroyed. They're a huge store of carbon. It's a really good idea to restore them. The amount of carbon there is very, very dense. And the project there, I won't name it now, but the has claimed that it's planted X number of hectares of carbon and therefore mangrove, and therefore sequestered a few million tons of carbon, and then sold offsets at that volume. When you look at their claims, you'll figure that the auditor hasn't done a great job, and only about a quarter of the trees that are supposed to be standing are standing. So that project is over-issued by basically a factor of 4. That's really not a good basis. Well, it's a terrible basis for a net zero claim, because for every 4 credits you're buying, there's only 1 ton of carbon sequestration actually taken place. So that's just like a direct example. We use satellite data and machine learning to, at scale, track the evolution of these natural carbon sinks, and we use more traditional kind of financial analyst techniques on other types of offsets, where you're looking at financials really to determine whether the activity has happened and is real.
Excellent. I'm going to shift over to SAR quickly. So SAR, some people may not realize how integral bees are to our agriculture businesses around the world. I would love for you to just explain a little bit about the role of bees in agriculture, what you're trying to help solve with Beewise in that regard, and also, if you don't mind, a connection to climate change and the issues around that.
So, I think the best way to start is to give a couple of stats that tell a story and then kind of dive into the actual kind of underlying importance of the bee. So first and foremost, 75% of all the fruit, vegetables, seeds, and nuts that we consume on the planet are pollinated by bees. Things like apple, cucumber, avocado, and a variety of things, even cotton, coffee. So all these things are pollinated by bees. 75% of all the fruit, vegetables, and this is true for 8 billion people on this planet. So from China to the US, everything in between, the bees pollinate 75% of our global fruit and vegetables. And so the bees really play an infrastructural role. You can have an amazing avocado field with great soil, fantastic irrigation, great weather, and a ton of money. If you don't bring in the bees to pollinate your field, avocado happens in April, you're not going to get much of avocado. And so the bees, it's not something that the pollination is not something that happens naturally anymore. You actually need to bring in bees, boxes of bees. Beekeepers do that at a commercial level, spread them out for about a month and a half, and then move them over to the next field for pollination and the next field and the next field. So this is what commercial beekeepers do. And this is how bees are so ingrained in our lives, and we're not even aware of how important a role they play in the infrastructure of farming. But on the flip side, there's a twist. And the twist is we're losing our bees. We are losing 35% of colonies every single year, year over year. And there's not much we can do about it. 35%, I mean, that's a third of all the bees on the planet every year. And this is after, us doing our best, us meaning humans doing our best to save them. So there's a huge discrepancy. We're dependent on bees for our global food supply on one hand. On the other hand, we're losing them. And this paradox has to be resolved. I'll just talk about what we do in a second, but the reasons why we're losing our bees are wide and many. In opposed to COVID that we're familiar, there's a single culprit. You can identify it and fight against it. With bees, it's a plethora of issues that amplify each other. So there's pesticides we use in the field, there's pests and disease that didn't used to be, but most of all, there's global warming. And, like Alistair and Chris before that talked a little bit about the carbon in the air, which is, we're all familiar with carbon and we're all familiar with the rise in sea levels or even ocean acidification. Not everybody is aware that we're losing our bees on this planet. And this is not in 50 or 100 years. We are losing 35% of the bees today, this year, last year, next year, and the number only grows. And so we're 20, 30, who knows, years away from actually getting to the point of no return where we can't really support our global food supply as there's more mouths to feed on this planet. So BeeHome, as you can see behind me, is a device that we invented, and this device actually allows bees to grow and not only survive, but thrive in this device. There's robotics, computer vision, a lot of artificial intelligence, and using all those modern technologies, we're able to provide the bee a much better home than the traditional wooden hives we see in the field. And this BeeHome is really what allows us to lower the colony collapse of bees from 35 that we see as the industry benchmark to less than 8% in our devices. And we're still iterating and lowering that number as time goes by.
Amazing. Thank you. Chris, so a lot of folks may know there's a war going on in the Ukraine. It's caused a huge disruption in oil and gas around the world. And oil and gas, I'll say, and love your opinion on this, isn't going away tomorrow. We're in a transition period. We're going to need oil and gas. Tell us just a little bit first, because some people may not know about methane and how important it is for us to manage methane, but also a little bit about your view of oil and gas.
Can you see my screen?
Yes, thank you.
Great. Well, here, let's give a little bit of school about methane. So methane is natural gas. And I'll admit, I was formerly in the state Senate in Colorado, and back in 2009, we closed a coal plant and converted to a gas plant. And I was so excited because I really felt we had found the bridge fuel and it became known as the bridge fuel. Then I went off to build a bunch of other higher ed companies and then came back to do a climate SaaS company a decade later. What I did not know as a state senator is that if you leak more than 3% of the total amount of natural gas going into any process, it's actually worse than coal. The general perception is that, and it's true, that if you don't leak anything out of the pipe, if all the methane, natural gas, CH4 stays in the pipe, it is true, natural gas has half the carbon footprint of coal. The problem is that if you leak more than 3%, it's worse than coal. So how does that math work? It works because of this equation right here. If you have something that for a decade is 86 times worse than CO2, it doesn't take very much leakage out of the system for natural gas to go from being the bridge fuel to being a disaster for the planet. And if you look here, and the other very, very hard thing that we do, because we believe that measurement matters. So for us to tell lots of our clients how many of those amazing carbon offsets from Alistair they have to buy, you have to measure what matters. And you can tell right here, the EPA, based on a very old school formula, believes that only 0.4% of the methane is leaking out of the Permian. This study done by Kairos and Stanford says, it's actually closer to 4%. There's one study that has that 9. And if you even go to the cleanest, most dry gas, just no oil, just gas only in Pennsylvania, the ratios are similar. So the problem is not only is methane substantially worse than CO2, it's unfortunately being leaked throughout the supply chain. Having said that, and I know this is going to be a big shock to people out there, I'm actually a Democrat for fracking. I'm one of the few with Joe Manchin who believes, because of national security issues and other things in my life, it is actually the bridge fuel. We just forgot to make a mandate that you have to keep all the damn methane in the pipe. And that's what we do, because measurement matters. And when those companies want to get a pathway to net zero, the question is, are they buying carbon offsets for a 0.47 estimate, which is not accurate, or are they buying carbon offsets for the 4.52 actual measured amount that are preventable when they go to Alistair? That's our business model. This is really serious. Why does it matter? If you stop methane, if you just literally clean up methane, which is primarily done by humans in agriculture, oil, and in waste management, landfills, and in sewage, if you stop that, it reduces the footprint within a decade. Because the good thing about methane, unlike CO2, is it goes away in 10 years. If you do that, it reduces global temperatures by 0.3 C. There's nothing else out there. I guarantee you, there's nothing else we can do that affects the climate by 0.3 C that's completely doable. That's why I'm really a huge believer in man-made effects on climate change. And this industry has got to clean this up. Why does it have to clean it up? Because number one, we have to get Europe off of Russian gas for sure, because that's a double externality of democracies controlling fossil fuels as well as solving climate change. But at the same time, there are 2 billion people who don't live in the abundance of the 65 of us on this phone call. Those people also need to be brought out of energy poverty. And the way to do this is to measure everything and have a really true net zero economy, a circular economy. And we're probably going to have to sequester some carbon. But this is a big deal. This is what we can do to solve.
Yeah, I just, to say, I'm violently in support of us focusing on methane. And I think, it's been an issue that we haven't focused on for all the reasons you've just mentioned here. A little bit about what we can do about these sort of issues is we've got to invest in a lot of different technologies, and each of these businesses represent businesses that we've invested in. But this isn't the first time that everyone's gotten very excited about clean tech. It happened in the 1990s. a whole lot of VCs, lost a whole lot of money. And I would love to hear everyone's opinion here of why is it different today? Why does this make so much sense? Chris, you want to start us here?
Sure, I'm going to go back and share one more slide because I've talked about this and repetitive, and I think people get this. So this is the supply chain. So I talk about, we're screaming down not a 25-foot wave, it's a 100-foot wave. It is a 100-foot wave, and climate change is a 100-foot tsunami that is going to blow through the US as well as the global economy. Why is it? Because there's not one, but there's 4 different prevailing winds behind this issue this time. And guess what? Regulation is the weakest of the 4 forces behind this. Candidly, the US government and Joe Manchin and even COP26 is not what's driving this. What's driving it the most is investors. And it's investors because people just do not want to be affiliated with companies that are on the wrong side of history. It's going to be similar after Alistair's done proving really high quality offsets. People are going to shun brands that don't authentically show that they're on a pathway to net zero. And all the greenwashing is going to go away because when the measurement economy comes, I guarantee you, you're going to look at yogurt, Chobani, Yoplait versus Danone, okay? You're going to see a score based upon their climate activity, based on how they got that dairy into that package and how they do that. When that score comes, I guarantee you, I would not want to be the yogurt brand that has the worst climate score. That's what's happening out there. And it's a movement at the millennial revolution on this. Trust me, you do not want to be a corporate brand executive on the wrong side. That's why greenwashing is so prevalent right now, because they're all trying to buy time authenticity. The other big issue is buyers of commodities. Who would have thought a commodity would actually have a differentiated carbon footprint? Out of nowhere, we created this thing called responsibly sourced gas. 2 years ago, we coined the phrase. I now meet people at conferences who have that in their title because we've taken a commodity in oil and gas and we said, guess what? Not every piece of oil and gas has the same carbon footprint. So buyers are happening. And now lastly, this is the Danone yogurt versus Yoplait versus Chobani issue. The operators themselves are starting to compete for Wall Street and consumer attention based on their climate scores. This is why it's so important to get rid of greenwashing, because in a measurement economy, you measure what matters. And trust me, those brand executives in the corporate suites of America are freaking out about their climate scores.
And Gary, just to piggyback on what Chris said, you know, the proof is in the pudding. I mean, if we're talking about yogurts, look at how people buy cars today, right? EPA became a very significant factor in deciding which car to buy. It's something we look at. It's something we track. You know, what's your fuel economy? Not just to save money, but because of the carbon that it releases. And then there's Tesla, right? So you can actually see the trend. So is this a good time versus 10 or 20 years ago? You can't really tell, but there's a lot of telltales. There's a lot of signs out there that says the consumer world is willing to invest in that and cares about it enough so that investments should kind of pick up, and they are. We see that and kind of follow that trend. So no one knows if it's the right time. Maybe it isn't, but it's probably a much better time than before.
But I'll give you an example. So Chiquita Banana or whatever, you know, sorry, you would know better. I'll bet you relatively quickly, you will have to be a Beewise certified agriculture producer or you'll be discounted out of Whole Foods. I guarantee you within 12 months, SAR could do that.
There you go. Alistair, thoughts on this issue of like, why now? Different? Why now?
Yeah, well, I mean, there's 2 sides to it that haven't been said. I'd agree with everything that's been said. I mean, one thing is like, yeah, this 100-foot tsunami is like, you know, that you can't cheat the physics, right? The climate is moving. It's only going to get worse, right? So you have a ratchet, right? You've got to get to a place where you can manage the impacts of climate change, and the longer you wait, the faster you have to act. So it's kind of a, you know, it's just a one-way street, and we're going down that street. So that you can't get away from. I think, you know, maybe the entrepreneurs this time round are a bit like there are actually relatively few asset light businesses in this space, but there are more probably proportionally than there were last time. So, you know, I was working in CleanTech 1.0 doing like classic high capex business, but just like, you know, difficult to make it work. If you're going to do something that has hardware, I guess you guys on Beewise, it's a subscription model, right? Yeah. So like you have recurring revenues, and that makes so much more sense. Yeah, so I think like the businesses are better this time as well. Certainly there are better businesses. Maybe not all of the businesses are better, but like there's a more investable set of businesses.
The ones that Insight invests in are
I hope so.
Right. I know that. Yes. I just want to shift the topic slightly to the idea of investing in companies to the financial system overall. There is a lot of change that's going on with both reporting standards, the SEC putting out some guidelines. This affects everyone. It affects the BlackRocks of the world. It affects the Bank of Americas of the world. It affects just about every business in terms of what they're going to say about ESG and how they're going to have confidence. The market's going to have confidence. I mentioned to you when we were doing our prep, you know, ESG washing is a thing. We call it greenwashing, but like specifically ESG washing, it's a thing. Tell us a little bit about your opinions about the overall market here, about what it is that we're going to have to be watching for in the coming months as we see the overall financial system adjusting to this.
Well, we're actually commenting. We just submitted our comments on the SEC, and you know they probably overreached in some areas, but underreached. But you know, I did this in my last startup with a family member of mine. But when you're building a category and building a company at the same time, it requires a whole different way to think. And we all on this call are building a category and building companies in a new category, which is the fact that we just have to save the planet. And so it is true. We're, as a little startup, and thank you, Insight, having helped us raise $100 million Series B, we're involved in EPA, we're involved at FERC, we're involved in SEC, we're involved in probably 20 different public utility commissions. And so when you're helping to move an agenda at the same time you're building a company, a lot of people ask me, is Project Canary a campaign or is it a company? And the answer is, it's both. It's why we bought, a little audaciously, because oil and gas companies are our clients, we bought 4 billboards in Houston that say net zero now, Project Canary. And trust me, a few of those CEOs have asked about it. So the answer is, all of us are building a category and we're building companies at the same time. And what we need is patient capital and a thoughtful investor like Insight to help understand the magnitude of what it's like to be a little startup. You know, I can't imagine what it's like for Beewise to think through how do they go to the Department of Ag and get preferential treatment out of the US Department of Ag. We're just little startups going up against we're disrupting big, powerful businesses. And it's great to have an investor like Insight that wants to put their shoulder to the wheel.
Additional thoughts, folks here?
I'll just add and say, the fact that we're talking about greenwashing shows that people care enough to do greenwashing, right?
To lie. They care enough to lie.
That's my point, right? So it shows there's actually incentive to be more ethical and responsible and sustainable, right? So we never used to talk about greenwashing 10 years ago. It didn't exist because nobody cared enough to greenwash, right? And so these things are giving me hope. Look, you know, what Chris said is very, very important. Being a category maker and a company maker at the same time is hard, but actually, and this is why BlackRock and Insight and many other investors are pouring a lot of capital into this. It's actually easier because when I go to work, you know, I bring my whole self. I never have doubts, and I enjoy my work because I can put down the same line of code or build the same technology anywhere else. I can do it for enterprise software, e-commerce, you know, cybersecurity, but I do it, you know, for something that leaves a real dent on this planet. So, me, my team, my customers, my vendors, my suppliers, my providers, we're all on the same page that we're doing what we always used to do, but we're applying ourselves to something that is much, much better, to a category that people are willing to greenwash for. So, you know, it's hard, but there's the I'm not going to call it satisfaction, but there's the fact that you know, we use it as currency. That is our currency, right? And we use it for, you know, to attract capital, to attract talent, to attract customers, and so on and so forth. So I'm very happy that we're part of building a company and a category at the same time, to Chris's comment.
Alistair, anything additional here?
Oh yeah, I mean, seconded, definitely. I mean, the it's interesting. You know, it was fantastic for us to see the SEC proposed the language in there. We had been lobbying on the offset component, and they basically brought it. They put it in there as we asked for it, which is wonderful. And we have a policy team. We've had some beef. Some of the people we spoke to in terms of investment, actually not insight at all. Actually, but we have a policy team. It's like, why do we have like 2-3 people talking to the FCA, CFTC, and SEC because of this, exactly for this reason, right? Because then it can be measured. And again, like I fully agree with Chris. Like, one of the reasons that ESG has problems is because there's no consensus what the appropriate metrics are. The measures don't correlate, not because the people are idiots that produce them and they don't know what they're doing, but they're not measuring the same thing because there's no real like key metrics that are quantitative. There's just like a composition of like partly like a hybrid of like a melange, a mix of different factors. For us, what we kind of concentrate on doing is like the critical net zero variables. Like, they're going to disclose their emissions, they need to disclose their offsets. You know, is that the right number? Can you get the right net zero number? Can you track it on year? If you can track the year-on-year performance versus where they should be, you now have a stack rank of the entire listed universe of businesses, and now you can drive change because of the thing that Chris mentioned about the investor preferences, that they are real and they will change the cost of capital for the worst businesses. So like you know, I think it's promising that there is the interest, and I think we're now getting to the point where some of those critical variables can be measured properly, and then you can actually hold people to account, and that will drive change.
So first of all, I would just remind everyone, please feel comfortable putting any questions you have in the chat. We'll definitely get the panel here to respond to them. So I've been around sustainability for a while, and you know, I've seen a lot of different trends that have occurred. And one of the things that occurred in the early days was you'd get a sustainable product, it would cost more, work in a poorer way, and we would try to appeal to the green customer to buy it, which is based on research, no more than maybe 15% of our market, the true greens, the super greens. You know, today I think it's different. I think, you know, what we're asking the markets to do, whatever your product is not to use it because it's going to make you feel good, but because it's actually a better way of doing it. And I think in some ways, you know, each of you've sort of shaped this out in a way. I'd love to hear a little bit about how you think about your particular approach as the better way than traditional approaches might have been. I'll start with you, Alistair, if that's okay.
Yeah, I mean, for the narrow case of what we're doing, there's like it's always difficult to know where to start. It's like so like offsets as an asset class, a little bit like trying to trade or buy equities without any statutory reporting. Like, nobody filed the 10K ever, and all you have is a pitch deck. Pretty much that's what it's like. and or trying to trade like credit without credit ratings. So that's what we're trying to do, is provide effectively the audited financial statements, the equity research report, and the credit rating in one go. And that's why it's hard work, and our team works works hard to solve for that. And then in the kind of the even narrower case of like, hey, most of these offsets are based on some natural carbon sink, forest, soil. That's where the majority are and will be for the next couple of decades. The technology-based approaches are interesting and we'll need them, but they've got to come down the experience curve a long way to scale.
And the cost curve.
yeah, exactly. They need volume and the cost to come down, and that virtuous circle, and it will take a couple of decades. It's a huge install base. But for all the natural carbon sinks, like what nobody really realized was like, well, we didn't even realize how bad it was. Like nobody's actually really measured forest carbon properly. Nobody's really measured soil carbon properly. The NASA, so we work with NASA JPL, and NASA's data on the US forest carbon stock. It differs from the US government's measures, right? So that's how bad it is. And the error is like plus minus 40%. So if you look at a commodity and you're trying to take delivery of oil, and you maybe delivered something plus or minus 40%, like it's not going to be, people are
and
not
how are you ever going to create an efficient market on this?
Yeah. Exactly.
When there's no confidence.
It's absolutely insane. So like it turns out that it's not because it's not possible, it's because nobody had really invested much. So we were speaking to the best researchers in the UK and the US, and we basically were like, oh, you just need to go out and measure the forest accurately. So we have a program of getting calibration data. We don't have to do this on all the offset projects, but we go into different types of forest and we laser scan it at lots of different resolutions. Our marketing director says, don't talk about it, but we cut down some trees, we weigh the trees, we weigh different parts of the tree to get see how the density changes. And then basically we get hundreds of thousands of hectares of data, millions and millions of trees. We can reconstruct the geometry of every single one of those trees, and we can get errors down to 3%. So that data then we use to train our machine learning models, and then we can get single-digit uncertainty rates across the whole planet. So that's basically how we're solving it, and that is a radical step forward. And we have papers coming out from that collaboration with NASA and UCL. As to what we've done there. It only cost us $10 million, $10 million to do that. So that's just a reflection of the lack of investment, because we can reduce the error rate by an order of magnitude. That's like so difficult in most industries. Like it's so difficult to do that. But like we've had people being like, why are you doing this? You're not like NASA being like, why would you invest in this? And we're like, because we need the answer to be right. Like, what's the point in us producing a market-facing data if it's wrong? Like, why would we bother?
I talk about it, and I'll share another screen on a couple if you are okay with that. But I talk about it. It's like trying to lose weight without a scale. Like, boy, wouldn't we all lose a lot of weight if we all just sat there every day? Wow, I'm really dieting effectively. I know I've lost a couple pounds. Well, you know how fast you'll bullshit yourself. So, literally, and Peter Drucker said it, John Doerr said it, everybody who's ever done anything that matters, you have to measure what matters, right? You can't get to net zero on estimates. And this is what exactly Alistair's doing. We're doing it from a totally different perspective. And so why does it matter? It's exactly the same concept on the other side of the equation. And I'll show you why. Why does it matter? Because those estimates are dead wrong. This is what they've been doing. But what matters when you start to measure stuff, it matters at resolution. Look at that resolution differential. If I can greenwash with this satellite resolution, that's a problem. When you put up our IoT devices on this pad, when they leave this pickup truck on, when they in the winter leave that pickup truck on, we know about it in less than a minute. That's accountability. That's the uncomfortable accountability of measurement that's coming. And I guarantee it's going to come in Beewise as well. I guarantee you those almond producers in the valley in California are going to have to rate how bee friendly they are to sell their almond milk to soccer dads and soccer moms in suburban neighborhoods. And that's the level of accountability we need to push. We need to cut the bullshit. We need to have a measurement economy. We got to hold these sons of bitches accountable.
And just to kind of add to Chris's point, the important part in all this is to make it also economical or financially viable, right? To kind of connect it back to your question, Gary, the idea here is not only to do it for the folks, the 15% greeny folks, but actually provide superior service and products and demand superior price. We're pricey. Our service is priced in a premium fashion compared to what you can get with a regular box. Because if you want to continue do greenwashing or just hurt the planet because you want to pollinate or grow almonds, go ahead and do it. But like Chris said, if you want to have the Beewise stamp and make sure that you didn't kill millions of bees because you had to apply pesticides, our device actually protects bees from pesticides. It shuts down and doesn't let the pesticides and any harmful substances get in. You can go out to the world as our customer and say, we are a bee-friendly grower. Just when you talk about bees, same thing could be applied for carbon, right? It doesn't matter which angle of global warming you tackle, as long as you tackle an angle and you make yourself a more global friendly, environment friendly service provider. And so the idea is that, we do that also by applying an ARR model, right? A subscription model. Our customers can leave every day. They're not committed to staying with us forever. With the ARR model, right? You get paid every month for your service. So, we're set up that way as a shop. When the phone rings, everybody tries and answers the call, right? My developers will answer a call because we know our customers have to get a superior service, superior product, and then we can kind of demand superior price and a premium for it. And this is how we're setting up Beewise. And it doesn't matter if we're providing an impactful product or a greener or ESG product. We don't look at that. We look at the service, of the result, and what we charge for it.
Well,
I was going to say, remember, and I learned this at the founding and the conceptual founding of Project Canary, the enemy of the truth and the true measured numbers, net zero, isn't lies. That's not what people are doing. They're just doing misinformation and buying time. So just remember that this is the sneaky part of it. It's not like people out there greenwashing necessarily lying, although some of them probably are. What a lot of people are doing is just literally trying to stall and buy time. And so remember, the enemy of the truth isn't lies, it's misinformation. There's a lot of people who are overtly providing misinformation on the real cost of solving climate change, simply to buy time for existing financial models that need to change today.
Yeah, and one of the things that I tell people all the time is the reason why Tesla has been successful is not because it's a quote unquote green car. It's successful because it actually delivers the better product. And the difference here is when the solution is a measurement of quality. What Chris is talking about is the quality of the data. And it's the same thing that Alistair is talking about, is about the quality of the carbon offset. And it's the same thing that you're talking about, Sar, which is literally the quality of leveraging bees in agriculture. And so that's like the place we need to get to. We're not quite there yet, but that's the place we need to get to. I do see we have a question here from Anthony who says, does the panel see a role for impact-motivated financial investors in the compliance markets, i.e. buying EUAs, CCAs, and the equivalent? Alistair, do you want to start on that one?
Yeah, possibly. Those compliance credits relate to emissions reductions, like cap and trade schemes.
Yep.
So it's kind of, those systems are like gardened or like managed by the regulators. So if you're looking at the EU ETS market, for example, if the price gets too low, the regulator will change the emissions allowances going forward. And if the price looks like overheating, then it will wind it back. So if loads of investors were like, oh, I'm going to basically net out the emissions of my portfolio by buying EUAs or something, you would achieve a price increase in the market, and that would shift from that would economically incentivize a shift from coal to gas to renewables. But like, if there's no guarantee, then the regulator won't like kind of wind the price back through the kind of the volume issuance mechanisms. You can do it through offsets as well, and we know some funds that are looking at issuing like ETF products or investment products to public investors, where they have bought some removals credits, they have bought some offsets on the voluntary markets. So that's definitely coming, 100%.
I guess where I would go is agreed, and I think there'll be an increasing amount of transparency. One of our big investors is the Canadian Pension Fund, and we're trying to get the sovereign wealth funds to start this conversation and to cut the crap, and this is my blunt language, but this matters, and it really matters to cut through the misinformation, because without doing that, you have a lot of people who are doing greenwashing. And I'll use an analogy that hopefully some of you had remember your European history, but carbon offsets without Alistair's overlay is literally like Catholic indulgences. I can really I can be a sinner, but I can buy my way into heaven at the last minute. And you all know where that happened and what Martin Luther did on the door of the church. So the problem is we're kind of in the Catholic indulgences phase right now of carbon offsets, because we haven't really gone to the measurement economy. We want lots of people in lots of boardrooms to say, oh, we're doing something. Here's our sustainability. Like sustainability reports in the oil and gas literally used to be a picture of Bambi next to an oil rig, and here's how much money I gave to the food bank. I guarantee you 2 years ago, 80% of the sustainability reports in energy was exactly that. This year, they're starting to be at the pad level. This is the whole revolution that's happening. And the millennial revolution is going to drive this. You have to measure it at the pad. You're going to measure those bees by the orchard. You're going to measure those carbon offsets by the picture that Alistair takes. This measurement economy is coming, and trust me, the CEOs, and let me just give one more shout out for Engine One, because Engine One was somebody who chose to leverage investors and really change the company. I'll bet you if you look 2 years from now, Exxon is a different company because the financial markets held them accountable. How did they hold them accountable? They said, in terms of shareholder value, I want you to be more valuable in the future. Being more valuable in the future requires you to change how you think. That's what we need to do more of.
So given that it's Earth Day, and there is always the sort of question of like the folks that are listening to us today, what can I do? Like, what can I do? This seems like such a big, massive problem. How can what I do even matter at this point? I'd be interested to hear your perspectives about the individual's role in dealing with any of these pieces here. Sar, do you want to maybe start?
Sure. There's so many things I can go through a list, but I think that the kind of underlying the common denominator, let's call it that, is just being in the right mindset. So you can separate your garbage, you can buy greener stuff, but being in the right mindset and realizing this is happening now. This is not happening in the future. This is happening now, not to our kids, to ourselves. We keep on talking to the next generation, and so this is an easy way for you to kind of just throw away responsibility and say, oh, the next generation, they'll figure it out. But we see, carbon in the air, ocean, sea levels rising, Earth Day, right? Read all the reports today. Gary, you asked at the beginning of the conversation, why is now a better time? Data, and it's not only data by Alistair and Chris, it's data all around. We see the data, and the data is not lying. Like Alistair said, physics, you cannot beat it. It's real, it's happening. And so, you can't tell somebody be in the right mindset, but you can tell somebody aspire to think about all these things that are happening and all these externalities to our lifestyle. each one with their own kind of set of externalities and degree. But if you're in the right mindset, you know, you will buy, you know, the products that are ESG, you know, oriented or aware. You will use the services in every aspect of your life, and I think that mindset is important. If all 8 billion people will be like that, you know, the problem will go away much faster than if it's just a few of us fighting the big corporations who are trying to, like Chris said, just sprinkle disinformation so that we can kind of get to our goal slower.
All right, Alistair, your thoughts here?
I thought that was great from Sar. I definitely agree. I think, I mean, like, you know, the uncomfortable part is, you know, we are all responsible for climate and biodiversity and all of these externalities. You know, there's this chart I should have brought it up on the screen. We call it the elephant chart because it's basically the emissions. It looks like an elephant's trunk, basically. The emissions have got to fall, and they fall really steeply. It's like down the elephant's nose, and then they kind of flatten out. And you know, a lot of times you'll see this, like consultants or, you know, corporates thinking about it. That actually applies to every person on the planet. Everyone's emissions have to go down 5% year on year, actually slightly more because you've got population growth. If your emissions aren't going down 5% year on year, like indefinitely, then like you need to have some pretty great excuse for that. And I think there's a lot of people with excuses. So like people are going to have to make some changes. It doesn't mean your life has to, it doesn't mean you can't have to give up everything entirely, but like the way we do live needs to change somewhat. That is inescapable, unfortunately.
Excellent. Chris, your thoughts here?
Yeah, and again, it is shareholder season. I would, you're all going to have a chance to vote. And and look, I'm not for every shareholder initiative. In fact, many of them are not very well thought out. I think the financial system, candidly, is the place that's going to get pressured the most, because most of these industries we want to affect are very dependent on equity and debt. I think we need to insist on really sources of truth in those marketplaces. And I think BlackRock, Blackstone, JP Morgan, they're all just at the edge of getting out of the first layer of this, and they're ready to go deeper. Encourage them and have your wallet follow them in that path. That would be number one. Number two is, don't underestimate what a small committed group of people, and I don't want to keep picking on SAR here, but like literally all of us on this call today could go hold the almond milk industry accountable in the Valley of California, saying, what the hell are you doing about the bees? Or else we're going to stop buying almond milk. Because is almond milk really better or worse for the environment than milk? Now, people might read it and drink it not to have lactose in their diet, but environmentally, is it truly worse? Is the methane from dairy worse or better than the way that we're thinking through the bee issues with SAR? And my point is that don't underestimate your own ability to have a curious mindset. I think it's also important to keep a little bit of humility about our view of truth is partial, but you have to also not let yourself get deluded by bad information, because it really is true. The enemy of the truth isn't lies, it's misinformation. And we have to be really curious and really focus on the truth to get to that 5%. And then lastly, one of the mistakes we do, and I see this in energy right now, around 100% renewable, and people get religious about the solution as opposed to curious. And in many times we get to the point where we disqualify legitimate solutions because we weren't curious enough to go deeper on the data. So I know that's a complex answer.
No, Chris.
People will sell you, and this 100% renewable is something I fight every day, and 100% electrification will have massive bad influences on low-income citizens in lots of places on stranded assets. So be careful of simple solutions and simple bumper stickers. Be super curious and determined to get the truth.
So Chris, I love the concept of curious. As it goes with it, is also asking the right questions. There are people, I'm sure you know them, that say absolutely not to nuclear. And that is a top line issue that you need to dig in and actually understand what nuclear today is about. You need to understand what the differences are. And if you're not willing to ask the questions, and to your very good point, being curious about it, you won't start to uncover what the opportunities are. Sar, did you have one other thing you wanted to say? I can't hear you, you're on mute.
Sorry, I just want to coin a term here. Back to Alex's point, if you're not lowering your emissions by 5% every year, you're greenwashing too.
Exactly.
All right?
Exactly.
That's what we can do, every single one of us.
Exactly. Thank you so much. That is a wonderful way to bring this session to a close. As I've told all of you way too much, this is the best part of my day when I get to talk to some super smart people who are doing some really meaningful things around solving some really hard issues. And I want to thank all of you for participating today. And again, Insight is really proud to be supporting companies like yours and what we're trying to work through. And again, me personally thrilled to work with you as well. So again, thank you. Happy Earth Day, everyone. Let's make it a meaningful one, and look forward to continuing the discussion. Take care now.
Thank you
Thanks
all.
so much.